Hi, I'm Peter Rose, founder of Longwood Currency Trading. There's a problem in Forex education, and you need to be aware of it. Because if you're not, then what happened to me 3 or 4 years ago is going to happen to you. I listened to that. I came out of 40 years of real estate investment. I was a software engineer for 33 years. I've got a degree in physics, bachelor's degree in physics, almost a minor in math. I haven't just fallen off the back of the truck somewhere. I studied the currency markets from 2007 and as an academic exercise until 2012. Opened a couple of mini accounts, wiped those out, figured I needed more education, and then took $45,000 and put it into a live account in, it was probably 2018 or 19 or something like that, and proceeded to lose $40,000 in a very quick period of time, probably 4 months. I'm not stupid. I know how to solve problems. But I was lulled into a sense of complacency in the Forex educational market, then and now. In real estate, when I was starting out, if I had a question about something, I could read a book. I could go to a source. I could listen to somebody. Well, we didn't have YouTube then, but you could listen to somebody. You say, hey, I'm going to buy this building and it looks like blah, 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 blah. What would you think? And the answer that they would give you was the straight scoop. And you would implement that and it would work. And I retired a millionaire because I learned the stuff well, implemented it, and succeeded. I listened to the Forex education. I see it now. It hasn't changed. So if you're not having the success that you feel you need to have in trading Forex, you better look at the education that you're getting. And if you're just out there getting started and putting out testimonials to some fool that's driving around in a Lambo with his hat on backwards, and you've only been trading with him for a couple of 3 months, and you're the one that's left from how many others? It's a miserable educational process that you're looking at unfold in front of you. The fact that somebody can take $1,000 and run it to $30,000 has absolutely no correlation with reality. Any more so than winning a lottery ticket and then winning a lottery on a ticket and then having the balls to get out there and say, well, I won the lottery because the moon was aligned into Sagittarius and the star was doing this, and it was the second Tuesday of the month, and I used my birth date mixed in reverse order with my grandfather's birth date scrambled up. It is madness. To see the so-called education out there using Fibonacci's and Bollinger Bands and that's not trading. And I caution you that if you go into this, you have to understand the fundamentals of the market, because that's what the former bank traders are telling that you need to do. No, you don't. Bank traders need to know fundamental analysis. You don't. And good that you don't, because how would you ever be able to compete with literally hundreds of PhDs in economics, mathematics, and physics, working through in technical analysis, working through PhDs in economics, working through fundamental analysis, and helping these large institutional traders come to fundamental decisions, and based on economic releases and all that other kind of stuff. Well, how are you going to compete with that? Fundamental analysis and technical analysis isn't applied. The bank traders don't use technical analysis, but the bank traders pay attention to when the NFP or the CPI releases are coming out, right? Or don't you know how all of this is put together? That's the problem with the Forex market, is there's no way to tell who knows what. Part of the problem is one of the strengths of the Forex market. The Forex market is what's called a distributed market. There is no central exchange like the New York Stock Exchange where everybody can gather together and your secrets or failures are exposed to everybody. Everybody knows about it because everybody's congregating around the same watering hole. In the Forex market, it's the interbank market where maybe 6 or 8 of the major banks in the world, Deutsche Bank and maybe Chase or JP, whatever, those are the major institutions that are behind the economic backbone of the Forex market. And so it's these guys that are really determining what the order flow should be, not based on Fibonacci levels, but based on a client who comes to them and says, I have a $4 billion order for engine parts. I need to sell this currency and buy that currency. What the does that have to do with a Fibonacci level or a Bollinger Band? All of the indicators that are out there are based on the same thing, averaging past price action. They're all the same. You might as well just use a moving average. I use a moving average. What do I learn from a moving average? Well, I'll tell you what, it's a lot different than you're being told by these educators. Remember, I've got a degree in physics and almost a minor in math. I think I understand moving averages. And I also understand the implication of those moving averages and how to use them, not as technical indicators. But I digress. You know as well as I do that the educational market is filled with this sort of thing. That's what everybody, and the reason that it's filled is because it's so compelling. You want to believe that if you understand fib analysis or Bollinger Bands or engulfing candle patterns or head and shoulders patterns or whatever the hell they're talking about, London Open, if you could just learn that one thing, you'd be rich. So you pay $1,000 for the course to learn how to play London Open, and it doesn't work for you. You pay $2,000 or $3,000 for your course to learn the secret sauce of Bollinger Band and RSI confluence, and it doesn't work for you. You buy somebody's $50 course on engulfing candle patterns, and you look at the chart and you say, well, he's saying that I got to use this engulfing candle pattern here, but why didn't he use this one or this one or this one? Or because that's not what he's going to trade on. When I lost all that money at $40,000, I stepped back from the market and I used the market as a blank slate. And I took my software engineering background, where I spent 33 years solving pretty complex business applications development at an enterprise level to solve those complex problems. And I used that to look at the currency market, and I went, wait a minute, I've been solving the wrong problem. All this education out there not only is incorrect, but it's solving the wrong problem. And it's putting the emphasis on the wrong thing, those three things. And immediately I understood what's the real problem we're trying to solve, other than it's trading and not all this other crap that's out there. And in 15 minutes, I wrote down the bones of 3 rules to resolve the 3 problems that I saw in the currency market. The currency market, when we're looking for a solution, is what's the solution of a currency pair? That's the problem you're trying to solve, not the currency market. Currency market is inordinately complex. You're not going to be able to solve that. But the solution to the currency pair itself and price action is what I took a rip from software engineering, the software development life cycle, SDLC, and I created a thing that I call the life cycle of a currency pair, because that's what we're looking at, the currency pair. What's the life cycle of that currency pair? What's the problem? What are the three problems that we're trying to solve in the life cycle of a currency pair? It's entry analysis, position management, and exit methodology. And what the fuck does any of that have to do with Bollinger Bands or Fibonacci's or understanding why the economy of one country is going to be stronger than the economy of another country, or what is going to happen when the political elections take place, and what's that going to do to the value of the underlying country currency? What do any of those three problems have to do with solving any of that? All of that stuff is outside of what we call the boundary conditions of each one of those problems. If I'm looking at entry analysis, all I'm concerned about is this little square that I need to concern myself before I hit bid ask. At some point, that currency pair will transition from an entry level maneuvering to position management. Where is that boundary line between entry analysis and position management? If you don't know that, then of course you wouldn't know that there's two rules, because once you cross over that boundary condition parameter, you need another rule. So we've got entry analysis, and I have four conditions in this simple rule. And write it down on a piece of paper, write it down on the back of a napkin. And there are four conditions that are met before I can enter the trade, and they also talk about what to do while you're in that entry analysis and right after you hit bid ask, what you do. That's that whatever that boundary condition is before you transition into position management. Now you have position management. How do you manage that position? And then finally, when you're done managing the position, you're going to exit it. Well, how do you exit that? Because, well, that's really easy. You close the trade. No. Are you going to stage out of your position? Are you going to close on a rip? Are you going to close on a congestion structure that you see? Are you going to close based on a profit target? Are you going to close based on a percentage gain against risk? No. Entry or exit methodology is a problem, and you need a solution to that problem. You don't need to solve whether it's going to rain on Tuesday or what the fucking Bollinger Band says. You need to solve the problem of how you get out of a position with the most amount of gain. I'm sorry, I don't mean to degrade any of the folks that are out there that are pushing this crap. They just don't know any better. Or those that do know better don't know how to teach what they know. And so they rely on using fundamental analysis and technical analysis. And then when you can't do it, they say, well, you didn't understand the system. No, that's right. You don't understand the system, and you can't understand the system because there's an infinite number of systems. When I was doing the solutions of complex computer applications, business applications, and you were working on a bunch of code, there were probably 20 different ways that you could solve that problem, 20 different ways that you could write your code that would bring you to the right solution. And no one of those was the optimum way. There was only your way that you understood and you saw the path through based on your knowledge of the rest of the code base that was there. And you went through and solved that. I worked for a guy one time. I brought him the solution to the problem that I'd been assigned. Everything worked. It was all nailed down and buttoned. And you know what he told me? I don't want you to do it that way. I want you to use this way. This is my way. What the fuck? You have your way and I got my way. Well, he's the project leader, so who's going to win? The guy that signs my check. Fuck him. He was the one that was, all his code was going out. They'd tell him to do something, and the code would go out and get there, and then it would get thrown back because he didn't listen to what the requirements were, or he made mistakes, or he was in a hurry, or he was doing too much, or he thought he was too smart. So the code would come back. He'd solve it and throw it back into the mix. He was a hero. He writes the code, he puts it in, and then there's problems that come up, and he gets the code back and he fixes the problem. Why did the problem get there in the first place? That's what you're faced with the educational process that we're seeing in the currency markets, 12 years ago and what we're seeing today. It's the same thing. It doesn't change because people don't change. You have to change. My karate master taught me 55 years ago that the only way that we can change who we are into who we want to become is to alter the way that we think, because we're a product of the way that we think, and thoughts are things. So you need to get rid of the education that you have and look at the market and come to the solutions in a reasonable manner. This is what I do in teaching currency trading to the few folks that listen to my channel and want to listen to what I have to say. I'm not teaching Bollinger Bands. I'm not teaching fundamental analysis. I'm teaching how to trade. And I have 3 rules. They're simple. Why make your life complicated when you don't need to? Why learn stuff that, number 1, you're not going to learn enough to compete with anybody, and number 2, has little relevance on the fact that you're a retail trader. If you're an institutional trader, you need to know all that stuff, but you're not. That's the advantage of being a retail trader. Why would you trade in any other way or use any other tools than the tools that you absolutely positively need to trade as a retail trader? I don't understand why the failure rate in the currency market is 90%. A study was done by a major FOREX broker many years ago. Over 25,000 of their clients, 44 or 43 million transactions, 90% lost 90% of their money in 90 days. Even though 72% of their trades were winners. We had a 72% win rate, and yet over 43 million transactions, 90% of the traders lost their money. Why is that? Were there 25,000 really stupid people out there? I don't think so. The only way you can change what's going on in your life is to change what's going on in your life. But you have to know what to do in order to make those changes. That was the problem that I was faced with. And I came up with 3 rules, and they do me really well, and I'm trading a 6-figure account. Do I lose? I lose big sometimes. Sometimes I lose far, far more than I do. But I know why I lose. The reason I lose is because I hang on to trades way too long. Because I did 40 years of real estate, and the number 1 rule in real estate is you buy it and you hold it and you don't sell it. And most of the properties that I had for 20, I held some of them for 30 years. Trading is trading. Please take some time to evaluate what you're doing. And if you have any questions about more details on how you could look at the currency market differently, send me an email, and I'd be happy to try to help you at no charge. I'm not running a training program here. If you do want to take a course or you want to take consulting, I've told this many times, it's very expensive because I know what I'm doing and I can help you get it done. So I don't need your money. I'm a millionaire. I don't need your coursework money. I don't want your course to have 100 people that I'm beholden to on a weekly basis to contact and all that stuff, and half of them don't believe what I say and the other half are not paying attention. I'm retired, so I don't need your money. Now, you can believe that or not. I only want to work with 1, 2 people a month, maybe. I have the capacity to work with 20 or 30, but I mean, why? I'm retired. I don't have to. And the solution is so simple. I turned my trading around in 15 minutes. Once I understood what the problem was, and once I understood what not to do, I knew what to do. I took my remaining $5,000 after that losing $40,000 in my account. I took that remaining $5,000 and doubled that in about 4.5 months. I think I figured it out. Can I double a $100,000 account in 4.5 months? No, because the process is different when you get to the larger account sizes. But I have probably 60 pages in my advanced solutions book that talks just about the problems of large lot size trading. So if you have questions about this stuff, I've got everything mapped out. Maybe I can point you in the right direction at no charge, and try to get you away from fundamental analysis and technical analysis, and try to get you trading instead of worried about what everybody else is doing. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.